Hello and welcome back to the Gold Newsletter channel. My name is Kai Hoffmann. I'm the JR mining guy over on X, and together with our good friend Brien Lundin, I'm your host of the Gold Newsletter channel. And I'm really looking forward to this discussion because I'm a shareholder of this company, so I'm hugely biased, but I'm also curious because the company we're about to discuss made a deal last week, and I've invited the president on the program to chat about it. Disclaimer, I'm a shareholder, but I'm not been paid for this interview. So I'm really curious, about the answers. And I'm like, I warned my guest a little bit. It's like, I'm going to take a bit of a hostile take on this, like without being a douchebag about it. I'm just curious about the deal. Those are all questions I like answering because I'm a shareholder. I'm a long-term shareholder of this company, and I want to remain a long-term shareholder of this company. It's the whole point. It's about me learning about the deal they've done and the reasoning behind it. So be fair to us and hit that like and subscribe button. Now, without much further ado, Doug, it is great to have you on the program. It's good to see you, my friend. Thanks so much for making the time.
It's good to see you, Kai. And I think every investor should have critical thinking that goes into their investments. So hit me with your best shot, Kai.
All right, I'll do my very best, Doug. But I have to, I've been a long-term shareholder. We've been on site visit. We've known each other personally as well for a long time. So when I saw the press release announced last week that you bought Sabergo as a Minera Alamos, or you're about to do a deal to acquire Sabergo, my jaw dropped a little bit. And the reason is like the Copperstone asset in Arizona was a tricky one, and it has some history to it, quite a bit actually. Since 2013, various groups have been trying to put it into production, and so far they've failed. 11 years later, it's your turn, right? So we got to dig a little deeper here and run us a bit through the highlights of the transaction, Doug. And I've got a couple follow-up questions, but of course, I really want to understand why you're doing this deal and where the opportunity for us is as shareholders.
Yeah, the origins of this one go back, I think you were on site down there, you were telling me in 2017. Darren, our CEO, I think first went to site in 2015. It's always been one of those ones in his mind. If it hadn't had problems, the opportunity wouldn't present itself right now. And its problems were always not necessarily the right teams operating at the number of companies that were there. It was over encumbered, lower gold prices, and that all created the opportunity for us. So there's tremendous sunk cost there at Copperstone, as you know. This was a former open pit mine, 500,000 ounces from an open pit. And the underground miners, there's two portals that have been driven from the bottom of the pit into the underground deposit. There's 4,500 meters of underground development there. There's a resource that has 160,000 meters of drilling that's gone into it. Tremendous sunk cost, but that shouldn't be confused with sunk value. There are a lot of projects I've seen in my career where the sunk cost just keeps getting sunk further. In the case of Copperstone for us, we saw true sunk value to take advantage of. And a lot of those issues that had been problems for previous teams, gold price, the over encumbrance of the project, or not having the right team, we felt that our group and the current environment addressed wholeheartedly. So excited for that because we think that there's a tremendous amount of opportunity beyond the base case PEA to take advantage of.
No. Let's start with the history of Copperstone a little bit. You mentioned 160,000 meters drilled. How confident are you in that data that you are now about to acquire? How usable is it? How much retesting and rework do you think you have to do? Or just run me a bit through that quality.
Yeah, it's pretty good. I mean, it's 60% of it is M&I resources. It's been drilled off very well. The resource that was put out has an aggressive dilution factor in board. I think 40 to 50% dilution, if I'm not mistaken. This is a 12, kind of undiluted, close to 12 gram ore body. So good rock value, which is important because if Copperstone has one challenge for an underground mining team, it's you'd prefer an underground deposit to be either horizontal or vertical or subvertical. Low angle mining is more expensive. You're looking traditionally at cut and fill, and it does have a higher operating cost to it. Now, the mining expertise that's on our board has already evaluated and come up with new mine scenarios. And we don't believe it all has to be mined through cut and fill. So I think that there are definitely benefits there. Will there be some additional drilling we'll do next year? Absolutely. But there's been a lot of test work done in the past from, albeit short-lived forays into trying to mine it, where there's tremendous amount of data. Data which is really useful and seasoned for how we can exploit the deposit now.
Doug, sorry, I must apologize. I got ahead myself here, just jumping right into the questions, but I think we need to sort of summarize the transaction details first.
Oh, yeah.
Like, what are you actually paying for the project, and what are you actually buying? I think we need to mention that first before we dive deeper.
Yeah, and no issues with that, because Minera, we've been looking at things outside of Mexico since 2019. You want to be multi-mine, you want to be multi-jurisdiction. We've looked at some deals which were going to be prohibitively diluted to our shareholders, and I think would have done our shareholders who had invested for the torquiness of our cash flow from Mexico a disservice. So I like this deal. It's a all-share transaction for Saber, as well as the vast amount of their debt is owed to three creditors, totaled about $9.4 million. They're settling that debt at 85 cents on the dollar, and we'll clean that. And that's important because we're looking right now to expand our lending facility with Oramet to encompass its use at Copperstone. And the last thing you want is inter-creditor relationships. So the creditors that have been incredibly supportive of this asset over the years have been very, very excited about our team getting involved. So they're converting their debt, and the rest of it, ultimately, in an all-share transaction, we end up as Minera shareholders with 86% of the pro forma company, and Saber shareholders and creditors own 14% of it. Again, that means the vast majority of that torque to the cash flow in Mexico, our existing Minera shareholders have great exposure to, and for incoming Saber shareholders, I think that they have a really great opportunity to participate in the platform of both companies' assets.
Yeah. No, I like that. 86-14 is a very favorable split, I'd call it. As you said, like we're not giving up too much of the upside here,
no.
And not getting in too much dilution. Knowing the creditors from Saber Gold, like I've had personal relationships with them in the past, and we've worked with the company back in the past. Knowing that they've got a big picture like focus here as well, like but I do have to ask, like, are there any escrow like agreements in place for those shares, because you're issuing shares for that debt?
Yeah, so I think to existing Saber shareholders about 56 million shares off the top of my head. It was very hazy last week after weeks of talking with lawyers, and I think about 21 million shares on the debt side. No escrow on that, no issues with that. We've actually already seen with two out of those three of the creditors have already made moves to enhance this project. So when you're looking at their long-term support, well, in the case of Star Royalties, we talked earlier about one of the problems with this project was it was heavily encumbered. Star amended their stream on the project from a 10% stream to a 4% stream. And that was great to see. And, obviously it helped the project, but it was nice to see a streamer realizing, look, we've got this great stream, but it's worth nothing if it over encumbers a project. This was a project that had the equivalent of over 10% NSR on it. That's death to a project. So with that amendment to the stream, it's the equivalent of like a 3% NSR. There's a 1.5% NSR to a family trust from the original discoverer of the Copperstone mine. And there's one other royalty, which would be a 1.5% royalty, and that's with one of the creditors. And he has an option to, or we have an option with him to exchange that royalty on Copperstone for a 0.5% royalty on a project in the Yukon called Three Aces that Seabridge are drilling. And we're going to exercise that option and then extinguish that 1.5% royalty. So when you look at why this project failed in the past, a big part of that was this over encumbrance. It was over a 10% NSR. It will be 4.5%, which, you know, is up there, but it's not something which is prohibitively high that it stops something advancing. And we got to that point because 2 out of those 3 creditors were involved as counterparties on ensuring that's the case. And I think it's a really strong indicator of support for the benefits of getting this thing up and running.
Yeah, I think, you know, like looking at it from that perspective makes a lot of sense because they've been, what is it, the bird in hand versus the, what's that saying? You have a bird in your hand, it's more valuable than the pigeon on the roof or whatever it is. Yeah. Or what, I don't know.
Okay, yeah, no,
There's Spatz in the Hand. There's a German saying, like, you'd better like have something, some real value in your hand than hopes and dreams.
Yeah, no,
right?
The English one is a bird in the hand's worth 2 in the bush, and that's what we're absolutely delivering. But they were instrumental in us doing this deal. Our conversations very early on with Saber, it was like, we need to talk to your creditors. They were very supportive right from day one, and you know, they've been long supporters of this deal. I think at this point, when you've got the right team that are going to be advancing it, you almost want to see, you know, why you were so patient and supportive and loyal come to fruition. Well, that's something that we can drive for them, and they seem very happy with the arrangement.
No, it makes a lot of sense. Star royalties you brought up, like, back in 2020, they invested or paid $18 million for that. I haven't tracked how much of that money is actually flown towards Kerr Mines back in the day, but I'm curious, like, Doug, like, where did the money go? Like, what was it used for? Where did you see it pop back up in terms of maybe equipment or something? And what was that money used for?
Yeah, I mean, there's a lot of work that they've done at site, underground rehab, and the like. And it wasn't all that money. In the end, a third tranche of it wasn't dealt with. And that's one of the reasons, you know, we were able to work on restructuring, or Andrea Alinsky, the CEO of Saber, was able to work with them to restructure that to some extent. You have to feel like, for Saber shareholders, it was a long-suffering kind of experience, and then through no fault of their own, I mean, Andrew sold the Brewery Creek asset to Victoria Gold, and you'd normally think, you know, $800 million counterparty operating a gold mine in the Yukon, no fear of not seeing all that cash, so $8.5 million up front. That went to the creditors, paid some of that debt down. They had deferred payments of $5.5 million that was also going to go to the creditors. That's all caught up now in receivership. We put zero value on that coming, and it put Saber under pressure. And it actually created the opportunity to work with the creditors to come up with an elegant solution that didn't make them entirely whole, but and also at the same time deliver a fair offer. We didn't want to get too cute with the offer to Saber. You know, it was 100%, you know, premium. But if you actually blend the blended premium, if you take into account the discount on the debt, was probably in the 50 to 60% range. And on small value deals like what Saber is, you know, those premiums do tend to err to the outlier side. But they were tough negotiators, as were we, and we just wanted to. Ultimately, you want to do a deal where everyone feels like they've won, but typically a good deal is where everyone feels that they've lost. Somehow, I don't think we have. I think this was. But I'm also glad that we did this deal at a time of improving sentiment in Mexico, because we've been, as I said, Darren's looked at this project for 9 years. We were talking to Andrew for multiple years. things got hotter in February of this year, but it wasn't to do with Mexico. It was absolutely to do with, is this an asset that our team can bring into production that fits our criteria for low capital intensity, and give our shareholders a little bit of exposure to a different jurisdiction, just from a de-risking point of view. Everything came together at the perfect time, I think, for Minera.
You just mentioned something I need to follow up on real quick, and please don't take it the wrong way. You mentioned discussions started seemingly in February, and there were elections in Mexico. Was that bit of a CYA kind of acquisition or a transaction to a degree as well, in case things went awry in Mexico in terms of open pit permitting or so? Was that sort of a bit of a backup plan? Like, does the geographical diversification play a bigger role than we might expect here?
No, actually, it wasn't February. It was March. I'm thinking about it. It was PDAC. So I think it was either right before PDAC or during it. But I mean, I know Darren and actually Bruce Durham, our board member, knows Andrew very well. So this had been a conversation that had actually been going. First time I met Andrew was at PDAC. No, because we didn't actually believe, based on what we were hearing on the ground and seeing on the ground in Mexico, we didn't give the same credence to the headlines that unfortunately so many people did in Mexico. It's funny in October when there was a Friday about a month ago where all this basket of Mexican stocks popped. I joked, I said, if only someone had been giving a presentation at Colorado Springs a month before explaining all of that. The best thing about the Denver Gold Forum and Beaver Creek this year was I had 10 days to explain to people that behind these headlines was a lot more nuance. But the market just, had been brutal for Mexican developers. So no, you want to be multi-mine and you want to be multi-jurisdiction. We've always believed that. There were presentations I gave in 2019 talking about multi-jurisdiction. We're going to be multi-jurisdiction before we're multi-mine, but one of the beauties of Copperstone is it will be a completely different team developing Copperstone, so that we're anticipating permits for Cerro de Oro kind of in the first half of next year. If they come, you're not thinking, oh, which one are we going to build? We have our team in Mexico to build Cerro de Oro, and we'll have a team in, so we can run what I call in our new deck a dual track development approach to both projects, because it's not like one or other is going to be a pull of all of our team. And with the guidance that we have on the board from some really spectacular, and particularly one spectacular underground mining engineer, we're already looking with his advice on the right team. Team is actually more important than infrastructure and underground development, because it's the team that's then actually going to efficiently mine that ore body. And I think we're very comfortable that we will augment our existing team with absolutely, the rock stars of kind of who are going to actually, the rock stars are actually going to deal with that rock underground. So it could have easily been seen that way. Honestly, Kai, I'm glad that for the last few months, the companies like Minera, Discovery Silver, that are arguably are like the proxies for Mexican permitting, have performed very well as sentiment and headlines, and cabinet appointments down there all are showing a more positive disposition towards mining, and we're hearing a lot of that on the ground from Sermonat, from others. I'm glad that we're doing this deal, period. But I'm happier that we can be doing it at a time of improving sentiment in Mexico, because it absolutely was not a reflection of our concerns about Mexico.
Perfect. All right. No, thanks for jumping down that rabbit hole here with me, Doug.
No
I've realized, I got to ask questions that I seemingly know the answer to as well, which is, what did you actually buy in Copperstone? We talked about Copperstone, the name and the company, but we haven't talked about what did you actually just acquire or about to acquire, right?
So sunk cost. well over the 25 million in sunk costs we talk about in the press release. Arguably, and I know 160,000 meters of drilling, is an expensive foray in its own right. 4,500 meters of underground development, 2 portals, all the existing plant and surface infrastructure, except a mill that we happen to own. So the capex for this project is 35 million, and 40 to 50% of that capex is plant and processing. Well, in the press release, there's a nice overview shot of the surface infrastructure from their PEA. And there's this hashed out mark, a little rectangle on there going mill location. Yes, that's where the mill will be located, but they didn't have the mill. I mean, the old mill, which was small, ripped out for scrap years ago. We just happened to have the mill. So it was a perfect gap fill analysis there. You couldn't recreate this work for less than 40 or 50 million dollars. There's a reason the company has over 60 million dollars of tax losses which are going to be very beneficial for us as we go into production, and you can apply those. So huge amount of sunk cost, but for us, I view it as sunk value. It's all investment into that project, which we can now take advantage of. I mean, I think we're giving Saber shareholders a fantastic opportunity to be part of our platform, without a doubt. I also think that we are absolutely taking advantage from a Minera shareholder perspective. I know that they will want to think, but are you taking advantage of a situation? And I think when you look at all that investment, when you look at the opportunity it presents, 14% dilution, but we're increasing global resources to by over 35%, to just under 2 million ounces, a 60% increase in our M&I resources off the back of this deal, 40,000 ounces of incremental low cost and low capital cost production on every metric. This is very accretive to the Minera platform, and certainly was seen that way from the analyst community that cover us last week. In fact, I had near universal support for this deal on Monday and Tuesday of last week when we announced it. And you always have trepidation. Does this seem like, wow, that came out of left field? But it was very, very well supported.
Yeah. No, fantastic. Appreciate that, Doug. And a couple things before we wrap up here. I've got 3 more points I want to talk about, because it's a number, or it's word 1 and 2 on the main slide of Sabergo, and the main presentation of Sabergo is fully permitted. In Arizona, that's a big ticket item. That's like the most valuable item almost, I'd say. Like, how much value do you attribute it, and is it fully permitted? Like, meaning, if you were to deliver the mill tomorrow, could you flick on a switch and start mining?
You could. You wouldn't want to, for a couple of reasons. You absolutely want to ensure that you've got appropriate additional underground development, so you've got enough working faces. So you don't want to jump the gun in this regard. The other thing is, Saber is accurate in its presentation. It has a fully permitted plan of operations, has water, air permits, the like. The current plan of operations, so we're making an elective amendment because the economics are enhanced if on a mineral processing side of things, right now you have to choose. Are you going flotation or are you going cyanide leach? And you can go one of those paths and flick a switch, so to speak. It's actually in the project's best interest, and the economics that will drive value from this project, for us to make a slight amendment on the mineral processing side, so that we have the flexibility to both use flotation and cyanide leach, as opposed to having to make a choice, pick one or the other, because we will want to use cyanide leach on the flotation tails. And that actually brings some enhanced economics on this project. And given that we need we basically need the next year to get everything else lined up. having a elective amendment to that permit on the processing side alone, which is a standard thing. We've already got permitting people working on it. This is as say, by choice. So Saber are absolutely accurate in terms of what they're saying in their presentation, and we are making a determination that we want to add some flexibility to the fully permitted nature of the deposit. And there's huge value on that, obviously.
I was going to say, like, next question, real quick, Doug, is like a logical follow-up. Like, any estimate on timing, and then of course the bigger question is how does it fit in with the sequencing at the other with the other projects at Minera?
Yeah, so about six to 9 months on that, which will run alongside with us re-establishing our mill down there, which will move down before the deal even closes. So if anyone's concerned that, oh, what if the deal doesn't close? We're committed on this, and then during that same time, there's about $600,000 of underground rehab down there. We want to rework the lending package with Auramet to incorporate spend at Copperstone. The project finance side is obviously critical here. And yeah, if Cerro de Oro permits drop in the first half of next year, we have the team in Mexico ready to go on the build at Cerro de Oro. So I have zero issue with building in Mexico and Arizona at the same time, given it's two different teams. And Cerro de Oro with permits, we always said on the Auramet package, like, it's drawable upon receipt of permits. Arguably, when you've got the permits, it's de-risked. So can you get better terms on that? Like we always, I think from the day we announced that Auramet package, we said that likely to be refinanced by the time you actually can draw it, because regardless of where the gold price has gone, it's obviously arguably much more de-risked sitting with permits in hand ready to build. So we're having those discussions as well. Big thing will be enhancing the team we have at site in Copperstone in the early part of next year, getting the mill down there, starting to put some of the big pieces back together. And we've got our Gantt chart of all the different components and with the permit amendment for allowing us to use both processing types. In a perfect world, everything would line up for around the end of next year. The world is far from perfect, Kai. In my mind,
tell me about it.
Throughout the perfect case, we're probably in a position to start mining early 2026, Q1 2026. And arguably, if Cerro de Oro permits come in, we could also see the same kind of timeline for Cerro de Oro, which is 6 to 8 months build. You could see both projects coming on in Q1 2026. At that point, you're looking at 100,000 ounces of new gold production with a blended AISC of, closer to $1,000 an ounce. I don't know where the gold price is going to be. I know it can be a lot lower than where it is now, and we're going to struggle to come up with efficient ways of utilizing that kind of cash generative capability of the two assets combined.
Now, talking cash generation, we have to talk quickly. Dilution is the last thing I have on my list here. Is dilution potentially from financing an extra project that wasn't really planned? Any plans on that? Like, have you ever put any thought in it? You mentioned the Auramet facility. Would you beef up the size of that potentially? Like, what does that look like?
Yeah, I mean, I think initially it's ensuring that it's got flexibility to use across both assets, and then looking to see whether if there's the ability to expand it, great, or bring in a second partner. And we've got another friendly lender that could be very supportive in that regard. So the initial thrust is on the project finance discussions. This is a project finance type story, and benefiting now from, Santana should be getting back to spitting out operating profits and corporate free cash, sometime as we get into Q4 and then into next year, kind of, also helps with the overall cash draw of this. We've always done a tremendous amount with very little, and we're very proud of that. We're not a group that perennially has to dilute its shareholders. And as a big shareholder myself, it's amazing how averse to dilution you are when you put yourself in the same shoes as your shareholders. I think we've done a tremendous amount with very little, and I think even on a go forward basis, that's kind of our mandate, right? To show actually what you can achieve without constantly having to dilute.
Perfect segue to my very last question. And your main slide, or your opening slide on the Minera Alamos presentation, says building the next mid-tier gold company. And I have to admit, I had to look up what the definition of mid-tier is, where it starts. And the first definition was it starts at 300,000 ounces. Okay, so now, of course, the question is now, Doug, is that an Easter egg that you've planted in there? Like, what's the plan? Like, how are we going to get to 300,000 ounces? Are we going to see more acquisition? Is it all organic? Like, give us a bit of forward-looking statement here, Doug.
Oh God, it's not an Easter egg. If anything, it's cliched, isn't it? Building. It's kind of like people talking about stuff that's world class that isn't. The reality is, we're building it. It's funny because I was asked about 6 months ago what would be a good modern day analog to Minera, and I couldn't think of one. But I did think arguably I said at the time, I think we were Calibre 8 years ago. The difference was Calibre bought their production base in Nicaragua. We're building our production base in Mexico. From then, and then it's funny because when I was asked that 6 months ago, I wasn't thinking at the time we're definitely pulling something off in the States, but they bought Fiore and bought their production in Nevada, and that was their toehold outside of Nicaragua. And we're now buying Copperstone, which again we're going to have to build. The difference between us and them is they bought production and grew off the cash flow from that to buy more production. We're building ours out, and arguably now with their Marathon Gold acquisition, they've jumped firmly into the world of mid-tiers. So it's an aspirational point. Where can we get to with our existing project pipeline? Well, if all Santana ever is 20,000 ounces a year, it's a great little ATM for us. Cerro de Oro is 60 for 8, but we're permitting an upside case of 80,000 ounces a year for 13 years. So Santana and Cerro de Oro gets you to 100,000 ounces. Great. What about Fortuna? Well, we want to grow it before we build it, but it's got a base case of 50,000 ounces a year. So now we're at 150, and you add Copperstone in there, it gets you a spitting distance from 200,000 ounces. Now, I think how you get from there to that kind of 300,000 ounce threshold is, well, with some of these mines up and running, you have a tremendous opportunity and tremendous cash generative capabilities to go out, and you're either buying production like Calibre did, or you're adding the next larger tier of development asset in there. And there are ones I'm looking at that could be that final step in trying to mirror the Calibre model, right? So it's aspirational for sure. But right now, with the addition of Copperstone, you can start showing visibility to really close to 200,000 ounces a year. And the difference is sequencing these things. The amount of capital required to get you to that is a lot less than trying to find a project that profiles at 200,000 ounces a year and build that, because that has been the undoing of a lot of companies hitting big capex overruns and the like, which have had a crippling effect for their shareholders.
Well, even Calibre's seeing some cost overruns at Marathon at Valentine. So even that is happening. Best example, which is not necessarily negative, but it just happens. The environment we're in, we're still seeing cost creeps everywhere.
Exactly.
It is normal. All-in sustaining costs at Newmont is 1610.
Well, you build something that's 30 million capex, and you have a 20% capex overrun. It's $6 million. It's annoying. But it doesn't but if you're building something that's $500 million and you have a 20% capex overrun, it's $100 million, and that normally has to be met with equity, right? So that's where I like this low capex build that we have. Copperstone plugs right in there with Fortuna and Cerradoros, really on the industry leading kind of side, and I think that insulates our shareholders from the inflationary pressures, which have had devastating consequences on a number of single asset developers. That's for sure.
No, 100%. Like, as I said, I do like the exchange ratios. 86-14 makes a lot of sense. Gives me a kick at the can without too much downside. So I really do appreciate that those terms. Doug, thank you so much for answering all my questions. I really appreciate it. It wasn't as hostile as you thought it would be, was it?
So, no, I haven't got grill marks on my face at the end of all this. So I appreciate it. No, I mean, they're great questions. For anyone listening, I mean, these are the things that we as investors should be thinking. Ask the tough questions. The easy ones, they're easy for you to figure out. You don't need me to tell you, because you can kind of look at the easy answers. You can figure those out for yourself. So it's a good example of what investors should be thinking about when they're digging deeper on something.
100%. Doug, thank you so much for being available. Makes a huge difference to us retail shareholders, so thanks so much. And to everybody else, thank you so much for tuning in here to the Gold Newsletter. I hope you found this informative and educational. If you did, please hit that like and subscribe button. Leave a comment down below. It helps us out tremendously, bringing people like Doug on the channel. Also, as I said, I'm a shareholder of the company. I haven't been paid for this interview, so keep that in mind when you do your due diligence. Thank you so much for tuning in. We'll be back with lots more here on the Gold Newsletter.